Monaco is the world's favourite tax haven, but that doesn't mean that there are no taxes in Monaco. In this episode of Monaco Insider, I'll explain exactly how Monaco's tax system works for individuals and for companies. Now let me start with a disclaimer. I am not qualified to give tax advice, but I can introduce you to people who are. So what I'm sharing with you today is for information and education purposes only, and you must take expert advice before making any decisions. So let's start with the big one, personal income tax. The income tax rate in Monaco and on Monaco residents is a nice round number, 0. It's been that way since the casino was built in the 19th century, when the ruling Grimaldi family decided they could cover the costs of running the Principality entirely from the money extracted from hapless gamblers who seem to forget that the house always wins in the end. What's interesting is that moving to Monaco for tax reasons only really took off after World War II, as tax rates kept increasing in major economies until by the 1960s the Beatles were singing about the UK taxman, where it was 1 for me, 19 for you. That and the glamour that resulted from Princess Grace's arrival in 1956 started the boom period in the Principality's attractiveness and growth. The only exception to the 0 income tax rate is for French citizens who moved to Monaco after 1957. I'm afraid they are still hammered by France's eye-watering tax rates. If you own property as an individual and rent it out, there's no tax on your rental income. However, if you own the property through a company, then rental income will be taxable. Unlike neighbouring France, there is no wealth tax in Monaco, and there are no taxes for holding properties such as the council tax that you have to pay in the UK. If you're getting value from this content, can I ask a favour? Please like the video, subscribe to the channel, and share the link with any friends who you think would find this stuff helpful. Thank you. Now, one tax you can't escape in Monaco is value added or sales tax, which is levied at a standard rate of 20% and a reduced rate of 5.5% on some goods and services. There's also stamp duty to pay at different rates in different circumstances. This is applied to documents used for civil and legal purposes, or which are needed to prove something in a court of law. If you rent a property in Monaco, there's a 1% stamp duty payable on your tenancy agreement, calculated based on the annual rent and charges like maintenance fees. If you buy a property with a mortgage, there's a stamp duty tax of 3% of the mortgage amount, while if you sell a property to an individual, you pay 4.5% of the sale price as stamp duty. If the property is held in a company, the stamp duty rises to 6.5%. If you sell movable assets like works of art, there's a 5% stamp duty levy, though this sometimes does reduce to 2% for sales at public auctions. Finally, if you sell your business, there's a 7.5% stamp duty charge on the sale value. I touched on company taxes, so let's clarify the position there. If you set up a company in Monaco and more than 25% of your business transactions take place outside the Principality, then your trading profits are subject to CIT, corporate income tax. The rate of corporate income tax has recently been reduced from 26.5% to 25%. And there is another twist you can use if it's relevant to your circumstances. It's counterintuitive for most business owners who come from high income tax countries, but it works well in the Monaco regime. If you are the main employee in your Monaco business, you can always pay yourself a high salary, which will be free of income tax, and will also have the effect of reducing the taxable profits in your company to something adjacent to 0. The last chapter we should look at in the story of Monaco taxation is what happens when you shuttle off your mortal coil, in other words, inheritance tax. This applies to any assets in Monaco, regardless of where the deceased person lived, their domicile, their nationality, or their country of tax residence. The amount you pay is based on the market value of the assets at the date of inheritance and ranges from 0 to 16%. It all depends on how closely related the people inheriting were to the deceased. So if you leave your worldly goods to your surviving spouse or your children, there is 0 tax to pay. If you leave it to your brothers or sisters, you'll be charged 8% transfer tax. Uncles, aunts, nephews and nieces would pay 10%, while more distant relatives pay 13%. Finally, anyone outside the family who inherits your Monaco assets will pay 16% to inherit them. Still much better than the 40% you'd pay in the UK and other high-tax Western countries. I have a question for you. What's the biggest surprise you've learned as I've outlined Monaco's tax system to you? Put your answer in the comments or email me directly on homes@monacoestate.com. So that's a whistle-stop tour of a complex subject, but hopefully it's enough to whet your appetite to take a serious look at making Monaco your home. If you haven't already downloaded a copy of our special report on how to make Monaco your home, why not do so now? The link's in the description and in the top right of the YouTube channel banner. Thanks for watching. I'll see you next time.